Hello everyone, welcome back. Today we are starting with our second chapter of class 12th accountancy. The second chapter begins with partnership. Okay, the partnership account has many chapters in your syllabus like the basic concepts, admission of partners, retirement and death of partners, dissolution of partners. Okay, weightage wise these are the most important chapters, and generally we see that students really enjoy these chapters. Very good, very interesting chapters. So let's begin with it. The second chapter is accounting for partnership, the basic concepts. We have understood one thing, that to understand any type of accounting chapter, first if we understand its theory perfectly, then the chapter becomes really simple, and if we don't do it, then we keep on stucking at various questions and solutions. Okay? So let's understand this. The term partnership, we all must have heard this somewhere or the other. Okay, what does this partnership means? Okay, in layman terms, when people come together, okay, they start a business, it's called partnership. But is it the specific definition of partnership? No. What is it? Let's understand this. So, nature of partnership. In nature of partnership, we understand that various things are written. What? Partnership has when two or more persons, first important thing, two or more, it is not saying one or more, okay, it is not specifying such number. What it is saying, when two or more. Why this two is so important? It means that only I, if I want to start up a business with only me, okay, no one else, it won't be called a partnership. Why? Because to be a partnership, it needs to have minimum of two people. Okay, so two or more, we'll understand what is the final extent of this more. Okay, what is the last number in which the partnership business can hold as a partner. So the first thing, two or more persons, what they do, they join hands. Why do they join hands? Like say for example, in this corona period, okay, I and some of my friends, we join hands, okay, let's distribute free food and medicines to poor people. Why we are doing that? Okay, it's social service, it's charity. So it won't ever be called a partnership. Why? Because the second thing is, when two or more persons join hands to set up a business, the idea behind is has to be a business. Okay, what we understand with business, we have understood it in class 11th, that business is an economic activity, okay, with the mindset of we'll try to earn profits, we might incur losses. So when two or more persons join hands together to set up a business and to share profits and losses, okay, a partnership cannot be like that, okay, I don't want any profit, I don't want to share any loss. No, if you are a partner, the idea is you will share its profits and losses. They are said to be in partnership. Now, we know one thing, that India is a country which is governed by laws. There are laws for so many things. Okay, in the same way, there are laws for partnership business also. This law is called the Indian Partnership Act 1932. The law name is the Indian Partnership Act of the year 1932. Now, kids, when we got independence on like 1947, 15th August 1947 to be precise. The law is before independence law. That means this law was made by Britishers, and why we are still following this law? This is a normal question which pops up in our mind. This law is such an old law. Why we are still focusing on this law? Because they have made such a superb law. Okay, the provisions are so good, and when we got independence, yes, we have changed so many of the provisions which were not at par with our constitution. We keep on amending the laws as per our needs. So the laws which govern partnership in India is called the Indian Partnership Act 1932. So, according to this, the first thing that we need to learn is, generally you don't have to learn the section numbers, but in MCQ also, this question is very common, that which section of the Indian Partnership Act 1932 governs the definition of partnership. So, section 4 of the Indian Partnership Act 1932 defines partnership as, now what is the legal definition of partnership? It says that relation between persons, okay, it's a relation between persons who have agreed to what they have agreed to share the profits of the business. But why only profits? Why not losses? Okay, we have just studied before that when two or more persons join hands to set up a business and share profits and losses, but here in the definition they have only written profits. So, see, in law we understand that losses are what? Losses are negative profits. So, when they have written just profits, it also includes the losses, just keep that in mind. So, section 4 of the Indian Partnership Act 1932 defines that what is partnership? It's a relation between persons. It's not person, persons. Why? Minimum 2 is required, who have agreed to share the profits of a business. Now, profits of what? Profit of not a charity, okay, profit of not a social service, profit of a business. Now, who does this business? Who conducts its operations? So, they have also written that carried on by all or any of them acting for all, that it is not necessary that in a partnership business all the partners have to work, okay. It can be that every partner is working, or it can be that any one of acting for all, few of them are working, okay, few of them are not working. That totally depends about their relation, okay. It's their relation which defines that who will work, who will not work. So, section 4 of the Indian Partnership Act 1932 states the partnership as a relation between persons, okay, who have agreed to share the profits, and the profits also includes the losses of a business, and this business can be carried on by all or any of them acting for all. Now, persons who have entered into partnership with one another are individually called partners and collectively called the firm. So, what is firm? The next thing, firm is all the partners coming together, they constitute a firm. The name under which the business is carried on is the firm's name, okay, not individual partner's name, okay, it's in the firm's name. Like in the company also, Reliance Industries, it's a company, okay, it's not Mukesh Ambani, okay. Then a partnership firm has no separate legal entity. Important. What does this mean? That the firm is not, the law does not differentiate between the firm and the partners, okay. No separate legal entity. It has separate legal name, but the entity in the law's eyes are not separate. Second, apart from partners constituting it, thus the essential features of partnership are, now very important, many questions come from this topic. What it is? We have more or less understood these points when we were doing the definition. Now, let us see. The first important point is two or more person, as we have already discussed that in a partnership just one person cannot start a partnership, or let us say I and my friend, just two people started a partnership. Now, something happened, he died, okay, only I am remaining. Will the business still be called a partnership firm? No. Why not? Because a partnership firm has to have minimum 2 persons, okay. If one of the partner dies or only a single partner remains, the firm will not exist anymore. So let's see. In order to form partnership, there should be at least two person coming together for a common goal. In other words, the minimum number of partners in a firm can be 2. So minimum number can be 2. So then what is the maximum number? Okay. Now there is, however, a limit on maximum number. If a firm is engaged in banking business, it can have a maximum of 10 partners. Now please, all of you, just remember this 10 is only for banking business. Okay, maximum number of partners of 10 in case of any other business. While in case of other business, the maximum number can be 20. So another thing that we need to remember is minimum 2, maximum for banking 10, other 20. Now, first thing is clear. Second thing, agreement. Why this word is so important? Because in our definition, we saw that relation between persons who have agreed, okay, there is no force, there is no coercion, okay, you have to be my partner. No, this is not the case. Okay, the persons who are entering into a partnership, they are agreeing that yes, I want to be a partner. Okay, so partnership is the result of an agreement between two or more persons to do business and share its profits and losses. The agreement becomes the basis of relationship between the partners. It is not necessary that such agreement is in written form. Very important. Why very important? Because it's not necessary that the partnership, this agreement is in writing. That means I just ask my friend, will you be a partner? Okay, will you be my partner? Let's do this business. We will share the profits equally. Okay, we will, I'll introduce 1 lakh rupees. You also introduce 1 lakh rupees in the business as capital. What is happening? It's all oral. There is nothing written about it. Okay, still the law will consider it as a partnership because it says that it is not necessary that the agreement has to be in written form. An oral agreement is equally valid. A lot of questions come on this thing, that oral agreement is valid, just discussed over a coffee. Okay, let's start a business and we'll do this. It is legally, I'll be legally bound, he will be legally bound by the thing. Okay, but in order to avoid disputes, it is preferred that partners have written agreements. So just to avoid, okay, let's see, the next day we fought over something. Okay, he filed a case on me. I'll say, I did not say that I'll give him 50% share. I did not do this. No one is there to corroborate what I am saying. When this is the case, then what is happening? Dispute arises. We will not go over it. We will just understand this, that a oral agreement is also valid. That means let's understand that I am Satyavadi Harish Chandra. Okay, I never lie. So my friend took me to court and he said that judge, he told me that he'll give me 50%. I like, yes, I am Satyavadi Harish Chandra. I told him that I'll give him 50%. Then the judge will ask me, then why you are not giving? Because it's an oral agreement. Okay, I just orally, jokingly I agreed to it. The judge will tell me, no, you cannot joke about it. Why? Because an oral agreement is equally valid. Now let's come to the third point. The third point states business. We have also covered this, okay, that in a partnership, business is an essential requirement. We cannot form a partnership just to do any non-economic activity. Okay, I and again my friend, okay, let's go, we'll kidnap someone, okay, or we'll do something, we'll organize a march or we'll organize a protest. Okay, these are non-economic activities. To be a partner in a partnership business, business is an essential requirement. So third feature is business. The agreement should be to carry on some business. Mere co-ownership of a property does not amount to partnership. Case study can come from this. Okay, what is this? Like, my father gave a property to me and my brother, okay, that this property belongs to you both. Now, it is not a business activity, we just enjoy the property together, okay, or we must have put it on rent or something, but it is not a business activity. So, mere co-ownership of a property does not amount to partnership. See kids, in NCERT, they have given such important things in just one line. The reference books, they just elaborate whatever the NCERT has given. So, let us understand its example. If Rohit and Sachin jointly purchase a plot of land, they become the joint owners of the property and not the partners. But if they are in the business of purchase and sale of land for the purpose of making profit, they will be called partners. So, a real estate firm where the main business activity is to buy and sell the properties, the land, the real estate, then it can be a partnership firm. But just one-off event, okay, the land looks good, let's buy it, okay, it is not partnership, it is just joint ownership. The fourth point is mutual agency. The business of a partnership concern may be carried on by all of the partners or any of them acting for all. We have again discussed this also, that everyone can work, okay, or if the relation amongst them permits, only few of them are working for all. This statement has two important implications. First, every partner is entitled to participate in the conduct of the affairs of its business, and second, that there exists a relationship of mutual agency between all the partners. Each partner carrying on the business is the principal as well as the agent for all the other partners. What is this? The first thing is so good, so clear, that everyone can participate, it's allowed, it's legal. The second one is what? The second one is mutual agency, the concept of mutual agency, where the concept of mutual agency. What is mutual agency concept? Mutual agency concept dictates mutual agency between the partners, that every partner is principal as well as the agent of other partner. What is principal? What is agent? Okay, it's not about the school principal. Now, the principal agent relationship is what? Let's say, for example, I am the boss and I hired a salesman, okay, and I told him, dude, you go, you sell my products. You give me minimum price is 50 rupees, you can sell it at whatever price you want, I want 50 rupees. Now, the salesman went, okay, he is representing me. I told him, yes, you can take my name that you came from my firm, you are representing me, you are selling my product, okay. He went to the market, he met a customer that I am from, I am representing him and we would like to sell you this product. They agreed some terms and conditions. Now, the agent came to me and I was like, no, I won't agree to this, you have sold it so less, okay, or I am not liable for whatever promises you have made to the customer. This will not hold. Why? Because I gave him to be the authority, gave him the authority to be my agent. Whatever the agent say will be binding on me, okay. Now, to understand this, here all the partners are each other's principal as well as agent. So, the partners can bind other partners by his acts and also is bound by the acts of other partners with regard to business of the firm. So, if one partner goes somewhere and promises something, if it is related to the business, that the other partners are legally bound by it to honor the promise. Why? That other partner who went and promised became the agent and all other partners became the principal. Okay? So, very, very, very important thing that the partners can bind each other with their acts, okay, with regard to business of the firm, but this line saves them. What is this? They can only bind by business. If non-business promise has been made, the other partners are not legally bound to honor that promise. Relationship of mutual agency is so important that one can say that there would be no partnership if the element of mutual agency is absent. Next thing, sharing of profit. Another important element of partnership is that agreement between partners must be to share profits and losses. Even losses are included. Okay? In the definition section 4 of which act? The Indian Partnership Act of which year? 1932. It's the relation between persons to agree to share what? Agree to share profits. But I told you the sharing of profits also includes sharing of losses of a business. Though the definition contained in Partnership Act describe partnership as relation between people who agree to share the profits of the business, the sharing of loss is what? It is implied. Thus, sharing of profits, losses is important. If some persons join hands for the purpose of some charitable activity, it will not be termed as partnership. So, I kept on giving you the example of this charitable activity, it will not be partnership. For partnership, any economic activity has to be there. And the last essential feature is liability of partnership. Each partner is liable jointly with all the other partners and also severally to the third party for all the acts of the firm done while he is a partner. Now, what is jointly and what is severally? In law, if you learn law in further classes, you will see these jointly and severally written many times. What is this? The partners are liable jointly with all the other partners. So, let us say the business suffers losses. All the partners are jointly liable, that everyone will have to chip in. One cannot say no, I won't give any money. Everyone is jointly liable. Along with jointly, they are also severally liable to the third parties. Let us say there are 4 partners, 3 of the partners became bankrupt. We actually don't have any money. The 4th partner, individually he has to pay the share of all the other partners also, because they are also severally, individually also they are liable to the third party for all the acts of the firm done while he is a partner. Okay, so if he is retired from the partnership and then the other partners are doing something, then obviously the partner who got retired is not liable. Not only that, the liability of the partner for acts of the firm is also unlimited. This implies that his private assets can also be used for paying off the firm's debt. That means what? The personal properties of the partners can also be used to pay off the debt of the firm. The liability in a partnership is unlimited. You will understand the gravity of this unlimited thing. How? Because this is one of the main reasons people opt for making a company, because the liability in a company can be limited. Okay, we have seen the company, one of the features of a company is the limited liability. Okay, in partnership the liability is unlimited. Got it? Now, this is the entire thing about essential of a partnership. Okay, essential features of a partnership.